Welcome to this week's edition of Trade the Trend, a weekly video about where the stock market is going. This video is going to focus on the S&P 500. I'm going to cover the ASX 200 as well as copper, gold, oil and uranium in a separate video. I'll leave a link for that in the description section below. As always, everything today is general commentary only, doesn't take your personal situation into account. With all that said, let's get into our first chart. So I've got the S&P 500 up here on the screen, and this has been another significant week for the US markets. S&P 500 hit another all-time high on Tuesday. By my count, that's 41 so far this year. So that's a lot of all-time highs, but it's still well below the record from 1995, where there were 75 all-time highs in the calendar year. We've had a pullback in the last couple of days. I'll come back, I'll talk a bit more about that in a moment. But I think the most significant price action this week has been elsewhere. It hasn't been in the S&P 500. So there are a few areas I want to go through and show you. First one is the Dow Jones. And what we have here, we've got a clear break out of a sideways holding pattern. So let me just quickly draw in this sideways holding pattern. So this has been tracking along sideways in here for nearly 4 months in this sideways range. So this breakout is very much worth paying attention to. The Dow is also rallying off these moving averages. We've got the 50 and the 100-day moving averages, which prices are rallying off. So that's another sign, I think, that the path of least resistance is in fact higher. Now, another notable breakout in the last few days has been in the S&P 500 equal weight. This is an ETF that I'm looking at, the equal weight ETF. Now, this was on the verge of a breakout when I recorded last Friday, Sydney time, so before the Friday session in US. It was on the verge of a breakout, and now we've very much got that breakout. Also rallying off these moving averages, the 50 and the 100-day, breaking out this little congestion band, which had been in play for the last month. That's what I was talking about last week. So we had the early stages of a breakout, and then that's followed through during the week. And this is really, I think, showing the broadening of participation in this in the stock rally generally. And this has been the components that's been missing in recent months. And until now, the rally had very much been led by a handful of those big tech stocks. Most stocks had not been participating. Hence, you can see this sideways trading pattern for the last 4 months in the equal weight. That now seems to be changing with the breakout. And you can see this quite clearly in this indicator I'm going to show you, just showing the percentage of S&P 500 stocks above their 100-day moving average. So only a couple of weeks ago, less than 50%, got down to 42% of stocks being above their 100-day moving average. So more than half stocks below that 100-day average. Now that's quickly cycled around to being above 70 before pulling back on Thursday to be 65%. So 65% of stocks, S&P 500 stocks, above their 100-day moving average. And I think this has got the potential I think this number has potential to continue increasing over the next few months. And that would be further signs of broader participation in the market. And of course, broad participation is the underpinnings of a healthy bullish phase. So this is something to keep an eye on and see whether we see that number continue to increase. Now, coming back to the S&P 500, what's been interesting in the last few days is that the S&P 500 has been lagging the equal weight. So if you just look at where the S&P 500 closed on Thursday, it's come back to around the same point it was on the 5th of July. So you can see where we are now, same as we were on the 5th of July. Let's jump back over to the equal weight and look where the S&P equal weight was on the 5th of July. It was back down here. So you can see the equal weight has well and truly outperformed pretty much this month. And I think what this is all about, it's really been about some of those big tech stocks pulling back, and where you've got the stocks making up the S&P 500 generally had been rallying. And so this is really the likes of NVIDIA, Microsoft, Google getting overstretched, pulling back to their 50-day moving average. You can see that there with NVIDIA. We spoke about this a few weeks ago, how it had become so stretched above the 50-day moving average. Like gravity, the 50-day average often really does eventually pull all these stocks back in. It's pulled NVIDIA in. It's done the same with Microsoft and Google. Hence, we're seeing the S&P uh, underperform the equal weight. That consolidating middle section and lower section of the market have now been turned around and started to rally. And that's where we're getting that outperformance in the equal weight. Now, I've got one more key piece of price action that I want to show you. But first of all, if you're getting some value from this, please hit that like button. Please leave a short comment. Just, hey, thanks for the video. It tells YouTube you're watching, and YouTube does a thing, shows other people. Hit that subscribe button also if you haven't already done so. Now, let's finish up with what I think is really significant. I'm going to jump over to the Russell, the small caps. And I think this is the breakout of the week. It looked like this move was in the makings when I was recording last Thursday, or after the Thursday's close. It looks like it was going to all start to happen, and it's really started to give us that confirmation in the last few days. The small caps, this is a sector which had previously been left behind for all of this year, and it's essentially we've had this big trading range. So it's like you look at what's happened this year. There's the last 7 months in the Russell. We've really been going sideways since late December, and now we've got that breakout. So I think this is really significant, very important to have a look and have this in mind. Looking at this chart, we've got a large basing structure in place that formed during 22 and 23. Rally off there. The last 7 months we've been tracking sideways, and we've been tracking sideways, building a new platform just above the highs from the top of that previous range from 2022, 2023. And now we have the breakout from that. And I think this breakout opens the potential for a move back towards the all-time high back in November 2021, and then potentially beyond that. I think that's the potential this breakout opens up. I think this is a segment of the market which is well worth paying attention to. I bought into a leveraged Russell small cap ETF last Friday. I'll show you what that one is. It's this one here. Ticker code is TNA. So it's a 3 times exposure. It's very much the pattern is very much the same as what you see in the Russell, but it's just elongated because it's leveraged. And so last Friday on the open, there's my position there. So we're talking about the breakout, the makings of this breakout last week, and then on the open, the next open, I got that position. What I'm doing with this now is, well, after this follow through buying through the week, I'm now able to set a stop loss only about 5% below where I got in. I think that gives it enough room to move about and hopefully let this trend consolidate and then start to engage to the upside. So I think this is a highly asymmetric setup within this market. Coming back to let's just jump back to the Russell itself. Look, I think with where we are now, we've started to see this pullback over the last few days. I think that's good. I think the pullback's good. A sustainable advance, any sustainable advance will typically rally, then consolidate, and then after the consolidation, the market can rally again. What would be good to see would be if the market could just track sideways, even for several weeks, let these moving averages catch up. Potentially, then you get another setup for another attempt to move higher. Prices are probably somewhat stretched above these moving averages at the moment after the rally in the early part of this week and the latter part of last week. If you didn't buy the initial break, I'd probably be inclined just to watch this now. I think the next consolidation could be the next entry point. I'd also be looking at the individual stocks that make up the Russell, looking for the stocks rallying off those moving averages. They're the ones which I think where the opportunity lies. Just summing all this up, there's quite a bit going on this week. I think the coming back to the S&P 500, I think the play remains the same as it has been for months, and that is stay long, let profits run, use a wide trailing stop loss to see off consolidation. And the other thing we've been discussing is, I think, focus on the components of the index, which we see when we look at the equal weight. Focus on the components, I think, rather than the index. And for me, it's a stocks which are rallying off those moving averages, which are breaking higher. I think that's where the current opportunities are presenting. And hence we're seeing that outperformance in the equal weight just in the last few weeks. So look, let's leave that there for this week. Hopefully that's been interesting. Hopefully you get some ideas from that. I look forward to coming back, talking to you again next week. Till then.